Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'll be your host for about the next 20 minutes here on Options Guide TV. The markets are open and maybe the government. Over the weekend, we did see some news that the Senate passed a budget or a bill, and they're passing it off to the House. And as of right now, looking at the prediction markets that are available, they're saying that there's about an 85% chance that the House will pass the bill and that we will have a budget. And, I always like to emphasize that when you say there's a 15% chance of something happening means that there is a chance, right? I always like to think of it as when somebody forecasts the rain, they have a tendency to, there's a 15% chance it's going to rain today. Well, and it does rain. So keep that in mind, that there's always a chance that it may not pass. But at this point in time, the markets are really loving it. The S&P 500 index is up about 0.75%. It's up 49 points on the day. It's trading at 6,778. And I want to lean into the positivity. I find it very interesting in that at the beginning of October, the government shut down. We were in October. The markets did nothing. Really, it was almost like a non-event for some reason. But I guess people just didn't think it was going to last very long. Well, it has. And I kind of felt like something might happen this weekend, mainly because air travel was being affected. And that also means that you're affecting businesses, because businesses most people like to travel that are, I should say, business slows down when you slow down air travel. So it eventually starts affecting people who have money's pocketbooks because they can't travel anymore. And usually when that starts happening, that's when you start seeing the pressure. And yes, something happened over the weekend. Now, hopefully the bill gets passed and we get back to where we're at. I don't have any specifics on the bill, and I don't want to get into the politics of it all. But bottom line is the government should be open. That's just my in general position on it. Let's lean into it a little bit. Let's look at a 0 DTE trade, and we got to get it on right away because the show starts at 11 o'clock. Like I said, between 10 and 10:30 is when I would normally do this trade. With the market currently at 6,778, looking at the real-time quote here, we got the derived value here. I'm going to go 15 points in the money, and we're going to look to lean to the call side, and we're going to open up our open wing butterfly. So on this expiration, we're going to be buying the 0 DTE November 10th. We're going to be buying the 660. We're going to sell two of these, or 6760. We're going to sell two of these. And then we're going to stop short, and we're going to buy the 6785. All right. 465. Dang, that's a little bit higher than I want. I wanted it to be somewhere close to 4 because we got five points of upside. So let's send this to the what if calculator. So we're a couple of minutes late. Still don't mind doing the trade. Pull this down. Let's try that again. Let's go back, get rid of this one. And 0 TE. I guess we'll ride with it. And we're just usually $4 is what we're looking at. And I thought maybe we'd still stay right around there, but we're at 470 now. Means that we don't have a lot of upside beyond the 6785 level. That was $4 this morning, actually. Almost exactly $4 on the open. 485, 460. I guess I would put it in at 450. Maybe we lean a little bit. Let's see what happens if we move this. Yeah, we're already jumping up. We just jumped up 5 points. Okay, let's get rid of this. Let's move it 5 points. Okay, so we're gonna go 67. We're gonna have to move quickly, right? 1, 2, and skip this and buy that. Yeah, there we go. $4, $3.95. Okay, let's try let's go 425. Okay, that's going to be our price. And I don't mind that. Okay, so now we're at 67.80. The real market is close to that. Send this to the what if calculator. And this is going to be our 0DTE trade for today. 425. If the market goes above our high strike, the 67.90, and it closes above that, we can still make 75 cents approximately. What this is saying is 70 cents. It brought it in right at $4.30. Our max risk is $4.30. If the market goes down, upside, putting this on, taking it off by 1 or 2 o'clock, using the same thing that we always do when we look at our 0DTE trades. I like where the vol's at. I like what's happening. We still got a little bit of volatility because there's still some uncertainty that this bill might get passed. Markets really love the fact that the government might reopen, and we're going to lean into that. Now, obviously, if this bill does not pass, we're up for a lot of downside, right? If it does not, if the government it goes another week, a record-setting shutdown, and extends the shutdown longer, well, if that does happen, then the markets are obviously going to take that really bad. That might be the catalyst that starts the 10% drawdown in the marketplace. So right now, this is where we're at. 425 is what I'd look to try to fill it at. And if I got to adjust, the markets are moving real quick. Right now, I'm showing that the S&P 500 index is at 67.75 now, so it's given up that 5 points, but I still think, yeah, if you got to adjust it, 420. I want to pay. I don't want to pay more than 425 for the trade. The maximum we can make is $5, and above the 67.90 level, right? So I want to be able to make something on the trade. If the market just hangs out here, which I think there's a good possibility that it might just kind of be muted and kind of hang around this level. But here's the difference. If we look at the strikes, and we're showing this right now, we're looking at the strikes. We're saying 67.65 to 67.80. That's 15 points wide. That's our long spread. Our short spread is 10 points wide. 15 minus 10 is 5. The maximum it can trade for above 67.90 is 5. And that's what this is showing us. The maximum it could ever trade for is right at the midpoint, which is 67.80. And at that midpoint, it could trade for 15. 15 minus 4 means you can make about 11. So we're not ever looking for a home run on these trades. We're looking to get out between 1 and 2 o'clock. We're hoping that we're profitable. If it ever goes outside of the wings on the downside, that's where your risk is down here on this strike. If it goes outside of that wing within that time period between now and 1 or 2 o'clock, you're probably just going to get out of the trade, because after that, time decay really explodes in the SPX, and you do have an issue trying to get out of those trades at that point in time. Doug is saying, go ahead and throw Doug's comment in. The market could jump in either direction. Yeah, the VIX is still down a bit. It's down a bit, but it's still high. It's still relatively high, considering that the market's opened up 1% this morning. So butterflies are still relatively cheap. The problem that I'm having right now is that it's all over the place, right? Where the markets are at, and that's the issue, is trying to peg the middle strike. So now we're at 67.81, but I want to make sure that I pay somewhere close to $4 for our open wing butterfly, no matter what strike I'm hitting it at. Now I'm going to change this up too. Let's go in and look at our long butterfly. Let's go back to the trading page. We're going to keep the same strikes. I'm going to do apples to apples. I'm going to look at the November 14th expiration. And let's markets, okay, 67.80 right now. So let's be quick, and let's look to buy this one. So 2 of these. Too many legs. 1 second. And I don't mind doing this trade. This trade is simpler. It's not going to be quite as expensive. And skip this and buy that. Yeah, so now we're 315. And the market's all over the place again. But we're going to reduce it down to about $1. We're going to lean into the bullishness of the week. I think on Wednesday is when the prediction markets are assuming that the House could get their vote done and pass the bill if it does get passed. And who knows? Maybe they come in late tonight and pass it at midnight. That's not out of the realm. Or not pass it at all. But bottom line is they could have a vote sooner rather than later. And if that is the case, then let's lean into it going into November. Then a lot of that uncertainty would happen. If you don't think it's going to happen, if you don't think the bill is going to be passed, don't do this trade. It's that simple. Just don't, because the market will not be at this level at this point in time. But I don't mind going out to Friday, especially if you could get it for about $3.15. That's about the right price. Saying 360, market right now is up a little bit. 67.83 is where I have it at on my real-time quoting system here. 67.83 is about where it's at. It's about right. This is at right now. All right, so not bad. Yeah. Any questions? I guess. Trying to keep pace with it. Good morning, Kurt. Good morning, LJ. Thanks for popping in. Yeah, I like this trade. I already got the trade on. I put it on this morning. I did the 0 DTE trade on the open. Right around 60. So I'm down a little bit, actually. It's right around 67.90 is my center strike on it. And the market is down. But I like the Friday trade too. And I might lean in, if you think about it a little bit more, I might lean into the Friday trade 4 days away with the November 14th expiration. I think I kind of like that one a little bit better, mainly because of what we just talked about. By Wednesday, we should know if this is good or bad. It's a limited risk trade. Just don't go too heavy on it. If this bill doesn't pass, there's not a chance that the market's going to be here. And if you want to, you can even lean on the downside, and you can go out and buy a way out of the money put spread if you wanted to. Spend a couple of dollars on that, and that could be one way to trade it. Another way to come in too, I guess. Let's look at doing something here. What happens if we put this trade on and we sell this and buy that right around the 6,900 level? Not quite enough. Okay, so what my alternative would be here, I'm going to send this to the what if calculator because we're going to watch it. If we sell this, try to generate some capital to pay for this trade. But I think that 6,900 could be a little scary if it gets hit on that level. But here's where I was thinking. I don't like it. I'm just going to show you what I was looking at. Selling this and buying that. 110. It's not enough. 10% credit. You're about one state. You're at 11 delta, but this could get reached. Even though it's a nice big round number, 6,900, that could potentially happen by the end of the week. So, and you're only bringing in $1. If I was bringing in $2, I would think about it, but it's just not quite enough. It's not enough of a credit to take on the risk of that trade. So I think we just ride with it the way it is. Well, LJ, I appreciate the comment. Go ahead and put that out there. The biggest thing about 0 DTE is, and I'll say it again because it's a tough concept. But to start with, first of all, I don't like to do it at 11 o'clock. I'd rather have the trade on between 10 and 10:30. This morning, I put the trade on at about 9:40. Is the first trade that I put on in the AM. And the biggest reason why is that I was just leaning into the markets and I wanted the initial volatility of the 1-day volatility of the actual SPX options. There's a news based, it's the market's leaning that direction. Let's lean into it. Okay. So time decay is huge after the noon hour. It's very big in general. You got a 0 DTE trade, but in particular in a large index like the SPX, from noon Eastern time until the market close at 4 p.m. Eastern time. Those last 4 hours of the day, time does not protect you as much as it does for the first few hours of the day. As you get closer to the expiration, in my mind, the way I like to try to say it is that the Greeks change, right? Theta is the main driver at the beginning of the day, and delta and gamma take over at the end of the day, implying that the markets move hard against you at the end of the day. It hurts a lot worse at the end of the day than it does at the beginning of the day. Time is your friend. Time protects you if you are wrong on your forecast. So if you put it on, you pay $4 for the spread, which is about what I paid for it this morning, and the market does go against you, and all of a sudden it's outside of your strikes, you can close it and you can still salvage something. You can still protect yourself, or you'd let them ride. Some people like to just say, I limited my risk to $4. I'm going to let it ride and see what happens on the upside, and I'm going to manage the upside and not manage the downside. That's a plausible way to trade zero DTE. Just want to be consistent with it. I personally, if it came down and it hits my short strike, which it's kind of close to, I'd probably just close this trade out. The market is at 68.70 right now, and it's now up a 0.8%. Let's see exactly where we're at. Yeah, 66,782. All right, so it's still doing fine on my end. But that's the way to trade it. That's the way to look at it. We realize what is driving the forecast, what is driving your what Greek is driving the strategy throughout the day is very important on zero DTE trades. Do you look at the dealer-based option softwares that show dealer positions throughout the day? Well, what? Okay, go ahead and put that in there. Not necessarily, but I do know this. If you do look at most recently, Tradier just hosted an event with the Chicago Board Option Exchange, actually now called CBOE. They just go by the name CBOE, which their stock's doing quite well, by the way. CBOE is the actual symbol. But with that said, they talked about the volumes, and the volume spikes because of the auto trading right around 10 o'clock, right around 10:30, right around 11 o'clock. They always see the volume spikes, and that's because of a lot of the auto trading system, and people are lazy. They say at 10 o'clock, I want to get in. At 11 o'clock, I want to get in. Or this is when I'm going to trade them. I don't necessarily look at the dealer-based option softwares. I don't follow it that much. I usually lean into wherever the direction is at and either do an open wing to the downside if the market's down, or do it to the upside if the market's up. If you want to try to get a little bit more sophisticated and try to guess where the dealers are going to end up, that's okay, but you don't always know exactly what they're thinking, and that always makes me nervous. Like even put call ratios, right? You don't know if there's a bunch of puts that are being traded, you don't know if they bought them or sold them, and that's very true. So that's the way I approach it. I approach it. I try to make it simple. I don't want to try to make it too complex, but understanding the dynamics of the pricing during the day and how they change, how theta is the driver in the morning and delta and gamma take over in the afternoon. I think that is a real important way to look at the trade. All right. Do we have any other questions? Because I'll go back and review these two trades, and let's see where we're at. All right. And I did mention, I mentioned on Friday, bluntly, that the government issue is, or the fact that the government was not open over the weekend, and we were getting to the longest government shutdown of history. I didn't want to do a trade over the weekend, so we didn't look at anything on Friday, because we actually talked about doing a zero DTE trade today. The news hit on Sunday, which was very surprising. They had a session to pass that bill, which may happen in the House. Who knows? But that is a big reason why we didn't do any trades on Friday. Still have a little bit of uncertainty with this, and I agree. This is not this is a risky trade to put on during the week, but I think I like the Friday expiration a little bit better than the 0 DTE, even though I do have that position on. All right, here's the trades. Scroll down. So this is the Friday, November 14th expiration. Let's go and send that to the what if calculator. I think we were trying to get it done for about 3 1/4 or 310. Now it's 340, 350, 340. Okay. 3 1/4 was about where we wanted to do it. We want to adjust the strikes to try to get that on. I want to trade somewhere around 3 1/4. And then the other butterfly is the 0 DT. And we'll come back on Wednesday and we'll look at it. The 11/10 expiration. Let's put these in. But LJ, by the way, I will say to this is anything that you can lean on, I would. So if you have that access to the dealer-based option softwares and you paper trade them, see if looking at something in particular kind of jumps out at you. All right, this thing is already up. It's trading for 5. I don't want to pay 5 for this, but there's our trade. So I guess we're already up on the trade. 450 wasn't bad. I think we were looking at 425 when we first entered it, but the markets are obviously moving very quickly. And that is, we sent that one. That's 11/10. This is the second paper trade. These are the 2 paper trades we'll look at. If they go against you, you want to get out, right? If the trade hits your short strike on the downside, think about getting out. Look at where your loss is and what type of loss you want. By 1, 2 o'clock, you're hopefully profitable. If you are profitable and the market's up in this range, well, we're okay if it comes back, right? Because we're profitable all the way up here, but the market comes back and lands, and I'll zoom in a little bit, and the market comes back and lands in the middle strike, we're okay. This is the area that you're nervous in, where you want to take that profit if you can. If we're up here, markets can come back down and still land within that strike, especially on the 0 DTE trade. Market's right here, right now. All right, everyone. That's it for this edition of Options Guy TV. I do appreciate you coming in, and the more the merrier. Let everybody know about this. We'll be back on Wednesday, and we'll look at both of these trades. Very rarely do I adjust any of these very short-term butterflies, but there's a chance that we could adjust the Wednesday trade based off of the information. So if the market is going against us, we'll look at that. But at this point in time, that's going to be it for this edition of Options Guy TV, and we will see you on Wednesday, 11 a.m. in the Tradier Hub, hub.tradier.com. Hope to see you in the hub.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.